Welcome. You're watching India Market Open and it's a very exciting Monday morning. We're gearing up for a pretty exciting day of trade, guys. Solid earnings from the broader market, 25,000 inside. Global cues rather supportive this morning. And the bulls very much in control. And Bank Nifty is woken up, which is great news for all of us.
What do you do when Mr. Market tells you that I want to hit 25,000? I want to hit 25,000. Do what you want to.
So, ab ki baar 25,000. Today is the day.
Yes.
And to add to the list of all the good news this morning, India bags its first Olympic medal.
Oh wow!
Manu Bhaker starts it off. She's the first woman, Indian woman in this category to win an Olympic medal. So that's an exciting start as well. So the bronze in the 10-meter air pistol, and it's a tough category. I mean, she loses the silver by 0.1 meters. So that's great pride and joy there. So lots of reasons to celebrate all around, and of course that's one as well. We've just opened our khata and our account on the Olympic medal tally, but of course everyone here cheering for the Indian contingent. Now, having said that, let's set up with the global cues. And frankly, no bad news or dark clouds on the horizon there as well. I mean, the Dow was up 650 points in Friday's trade. So a whole host of factors coming together to really make investors in US markets also fairly confident. And the PCE data for the month of June added to the party. So it's an inflation gauge, essentially a personal consumption expenditure gauge. It rose 0.1% month on month, 2.5% year on year, completely in line with expectations. Now, couple this with the other all the other data that we've been seeing from the US, so positive GDP data at 2.8% for Q2 came in. That was anyway boosting markets. So all of this together has led to a pretty good run-up. Look at how markets have closed on Friday, and of course the futures also looking good. So all in the green over there as far as the US is concerned. Even the Nasdaq up 1%. So you had a recovery in the tech stocks which were being beaten down, while your broader indices like the Russell 2000, etc., kept moving up as well. Look at how the bond rates have paired out because of this. Obviously, positive cues over there because of the kind of sentiments that we're seeing all around. So you had the bond yield, the 10-year bond yield at about 4.12%. So that was fairly positive. We'll try and pull that up for you. In terms of crude prices, there would have been a bit of a concern, but recovered fairly well. They were trending upwards as Middle East tensions have flared up again. So Israeli territory saw a strike. They're blaming Hezbollah. Have said they will retaliate. So there is a bit of a concern that the Middle East crisis could flare up again. But having said that, Brent was okay, about 81.2 dollars to the barrel, so not too bad. Asia has opened strong. So it's not just India which is looking like it's going to have a good morning. Asia's overall opened strong. The Nikkei up 2%, at one point was 2.5%, following on from global cues and from US cues. But also the Bank of Japan is expected to hike rates on 30th July. So that is being factored in as well, and pull up the implied open. And this is why we're saying that the markets have made up its mind to have a very, very good start to the week. 156 points up, a variety of factors leading up to that, and actually also continuing the trend we saw on Friday. Remember, after a fairly volatile and difficult week, I would say, for the markets, having to absorb higher taxes, etc., you saw Friday completely pull back fantastically. And that's sort of the mood which was continuing, because look at the fund flows. We were wondering who was buying on Friday. Everyone was buying on Friday, both FIIs and DIIs in the positive. So you have over 5,000 crores of net buys coming in on Friday itself, and that's what's placed it. And I reckon that the kind of results we've seen over the weekend is going to boost sentiments further.
Oh yeah, banking for sure. It's after a really long time, possibly for the first time, that the last 15 seconds of a trading day bring about the high point and a life high or a record high, because usually the market then tends to pull off and do the high the next day. This was so beautiful that we saw that trending move and the high getting hit on that day. So 25,000 is within sniffing distance, bulls firmly in control. And I was shocked to see that from all the indices that did well or last week, Nifty Media of all things was the best performing index. It returned about 7% in the week gone by. Now, pointless to talk about what the index will do because most people are getting it wrong. Everybody sound the bugle of caution had gotten it very, very wrong. Nobody's fault. It's just a difficult market to call as far as the index goes because the index is moving one way and that is higher. Every dip is being bought into. But I think pockets that are doing really well are pharma and chemicals. Look at the strength that came into the pharma names. It's unusual for a sedate stock like Cipla to log in a 6% gain in a matter of 30 minutes post numbers. That's quite stunning for a Divi's Lab to be up 6% without any reason, or maybe for some positive commentary that came in on CDMO from Lotus, I would presume. It's just very, very strong moves that are happening in pharma, very strong moves that are happening in the chemical space, both pockets to monitor, and a near silent run-up in insurance, with charts indicating optimism. I mean, just look at the gains that have come into the life insurance companies. The 1 month data, Nifty is up 3.5%, SBI Life 17%, HDFC Life 18%, ICICI Pru 19%, LIC 20%. Just the gains that have come into this bucket is quite stunning. Nobody quite anticipated this. Yeah. Maybe no negative news came in and that's why, but just a stunning run for life insurance companies.
Positive factors
as well.
Niraj, one, the budget has cut the TDS that you pay when you buy a policy, so that's seen as a boost for anyone buying policies. And the second theory, I agree, it's a theory, seems to be that with capital gains tax increasing and maybe equities become a little more difficult, some insurance products may once again be seen as an alternative.
I hope not.
I don't know.
I don't know.
But I don't know if they will. But that is the theory, that you bring it on par. So, you have a bit of a benefit.
But I hope that doesn't work because insurance is good for insurance.
Insurance is for insurance and you need greater penetration for sure. If they get a GST boost, which was what was being expected, that would be even better. It would be sone pe suhaga, as they say.
Yeah. Just to add to what you said, Niraj, on Friday's trade, you had 48 out of the Nifty 50 stocks closing positive. Yeah. And I think that was also clear standout. So the Nifty is not only gained, it's gained on a fantastic breadth in terms of trade. And across the bottom, an ITC to a Reliance Industries to an Infosys, stocks have closed very strong. Infi, in fact, closed at almost a 2-year high point. And I think we'd highlighted this. Neeraj had pointed this out on Friday morning that metals could stand out. And Friday, while media has done its bit of a dance this week, metals also made a pretty strong comeback. So it was broad-based buying. You had defensives like healthcare and IT perform. You had risk-on trade sectors like metals do well. So it was all in all a very strong trading session. Also, very quickly, just to put this in perspective, the Nifty began the August series with a 400-point surge. That is what we've gained in the whole of July. So what the Nifty did on Friday is what the Nifty has done in the whole month that's gone by. August historically has been a very strong month for the markets, barring last year when we actually declined. But if you look at 2021, 2022, the Nifty has actually pulled out very strong gains in the August series. If we do take out 25,000 today, it will be the quickest move to 25,000. So 1,000-point move in 21 trading days. So that's the kind of sharp up move that we are anticipating. On the implied Nifty, we already expected GIFT Nifty is indicating to start above levels of 25,000. What you also want to quickly keep in mind is the Nifty 50 August futures have added 9.5% open interest. It's trading at a premium. Bank Nifty as well is out of the woods finally. 51,500 is going to be an important level that the street will be tracking on Bank Nifty, which has acted as a very stiff resistance all over July series. There are no stocks in the F&O band this morning. India Cement is also finally out, and the Nifty put-call ratio has also improved, and the VIX has also declined. So it's a perfect cocktail for a strong up move in today's trade. Infosys was a standout. Today, of course, it will all be on ICICI Bank, whether it does help Bank Nifty scale to 51,500. Very, very strong earnings came out from ICICI Bank on the weekend. Along with that, a whole bunch of broader market banking names have largely outperformed in terms of expectations. But let's highlight the big movers and shakers today. Like we said, the list is extensive. Management conversations are long. ICICI Bank is first up on my list. Reported numbers on Saturday. It was a beat Q on Q and YOY. Operational performance was a very, very clear standout. Profits have jumped 11.5% to 11,059. You've had net interest income increase 7.5%. Margins have remained slightly lower at 4.3 versus 4.7, and gross NPAs have remained flat, for the quarter. Net NPAs have also remained largely flat, and non-net interest income has spiked about 23%. So it's been a strong quarter overall. NIMs have declined. There's been a beat operationally, which has led to a beat on profitability for iBank. Net interest income and asset quality is largely in line with what the industry and the street was expecting. So it's a steady quarter. Brokerages generally would be giving this one a big thumbs up. Well, along with that, you had two other names that I'll quickly highlight before we go into the broader market names. India Cement and Ultratech. Now, this, of course, is not related to earnings, but definitely a big newsmaker this morning. It's been in the works. It's been in the offing for the last month or so. But of course, the news that we wake up to is that the cement major Ultratech's board has approved the acquisition of a 32.72% stake in India Cement at a price of 390 rupees. This is at a 4% premium to Friday's closing price. With this acquisition of India Cement, which is India's largest cement maker, Ultratech is looking to expand its footprints in the South market. Remember, the South is a difficult market to penetrate for large cement makers due to a huge number of established regional listed and unlisted players which have entrenched dealership networks and strong brands in that market. This is interesting because these are times when the cement sector is going through sluggish prices in South markets. The promise of large-scale infrastructure development projects in the region, such as Andhra Pradesh capital Amravati, is probably what's driving, in the real estate development, is probably what's encouraging the large players to, of course, control the South market. But this is the big story. We will be dwelling on this in a little more detail in just a few minutes on the show. But it'd be interesting to see how the markets will view this. I think Niraj is doesn't want to come in. Okay, so we'll watch this out, and at 8:20 we will talk about this in a lot more detail. Another one that I caught up with was Indigo, Interglobe Aviation. So while aviation worldwide is struggling in terms of profitability, it seems like it's been a good quarter for Interglobe Aviation. While the headline number indicates that profits have declined, the news is that the decline is largely because last quarter was an exceptionally strong quarter for Interglobe Aviation. So comparing it YOY may not have been fair. Margins, despite the fact that ATF prices have risen, airport fees have gone up, they've managed to maintain margins largely. Revenues are on an uptick. They've been adding excessive number of fleets, so expansion plans on track, and they've guided for double-digit growth for the rest of the year. So for an aviation company, not only to be profitable, but to also guide for a strong year is something we should be taking heart from. The stock went into the earnings with very strong gains, was up about 1.5%. So there was no nervousness on Interglobe Aviation before the numbers came in. There are risks, but the management is confident that they can mitigate it as we go along. Well, apart from that, I guess there are a whole bunch of many more broader market stocks, but I'll hand it over to you guys to take us through everything else.
What I find interesting about Interglobe, and I think one thing to watch out is they want to finally start a premium segment. They want to go business class on some routes, which has not been what they are.
They're also looking at non-core business, so airport lounges, going into commercial aircrafts, right? So for courier purposes, cargo, that's the right word I'm looking for. So I think the diversification, the synergies are going to be backward and forward, more of a long-term play, but they seemed extremely confident even in, I guess it is a good market. ATF is a concern, airport fees is a worry, but I think they've got the eye on the ball and they know what they're doing.
Sitting with 65% market share, so you're anyway a giant over there. Yeah, so that's about Interglobe Aviation, but a few other results we have to talk about, and so many to get through today. This one's not so great though. SBI Cards. Let me begin by talking about SBI Cards. Total income up 10.8%. at 4483. Net profit is flat at 0.2%, but the internals has been a bit of a concern as far as SBI Cards is concerned. And look at what Bernstein is saying. They've maintained an underperform with a target price of 600 rupees for SBI Cards. They say, and the title of the report is really what caught my eye. It literally says, "Sell while you can." On SBI Cards. That is the title of the report.
It's the best title I've seen in a really long time.
Yeah.
I mean,
to the
although
point.
it's negative, but yeah.
No, to the point. I mean, negative or positive, it is for people to know what to do. So the reason is credit costs have inched above 8%, while card additions have slowed down 12% Q on Q, in fact 18% year on year. As a result, their ROA is down 4.1%, fallen about 61 bips, with no respite in sight. So expect a bit of a knock for SBI Cards. Shriram Finance, on the other hand, and I think those more details on those numbers have come in, or a whole host of brokerage reports. This is why I've picked Shriram Finance. Everyone from Nomura to Jefferies to Morgan Stanley is quite excited about it. And the key point is that this is a stock which has already been running up massively. Growth is much stronger than expected. Guidance is 15% for FY25, 21% year-on-year growth on assets under management. And for both quarters, last 2 quarters, Shriram Finance has grown above 20%. Nomura maintains a buy with a target price of 3,500 rupees. They see an upside of nearly 20% because of the asset quality improvement. And they find the current valuations also relatively undemanding. Jefferies maintains a buy with a 19% upside at 3,475. They say, yes, the NIMs have dipped slightly, but as expected. GNPA, meanwhile, has fallen Q on Q despite adverse seasonality. Basically, not the greatest season for this space, but they've done fine. Morgan Stanley on Shriram Finance also rates an overweight with a target price of 3,660. So I would say this is definitely one to watch out for. The other one, and this is, a space which continues to do well, I would say MCX, just fabulous numbers all round. I mean, revenues are up 61%. EBITDA has gone from 11 crores to 133 crores. I mean, this is one of those eye-watering kind of numbers that you've seen. Margins have gone up 56.6% versus 7.3%, and net profits have gone up to 111 crores. So this is another one to look out for as well. So definitely some positives there. Overall, though, I think a lot of the numbers, at least what have come out in the last 48 hours or so, have largely been good.
Yeah, a lot of good numbers. I mean, IndusInd Bank, we ain't going to talk about it too much, but IndusInd Bank had a very decent performance, viewers. I know you'll look at the gross NPAs having gone up, but most brokerages are saying that it's actually a lot better than what was estimated, so keep IndusInd Bank in mind. But the 3 stocks on my radar today, one of them is Sorry, I've got confused. One of them is Kaynes Tech. Let me start with Kaynes Technologies if we can. So revenues were up 69% at 504 crores. The estimates were 477 crores. EBITDA margin 13.3, estimate 13.5, largely in line. PAT up 104% at 51 crores versus estimates of 46.2 crores. The point about this is not that it has beaten estimates handsomely, but that it's a company that, while it's expensive and everybody keeps on questioning about its valuations, it's delivering quarter after quarter after quarter, which is the big thing. So do watch out for Kaynes. Nuvama raises the target price on Kaynes from 4,200 to 5,000, saying that this is a business that continues to do well and might continue to do well. So watch out for Kaynes in the session today. By the way, speaking of Nuvama's own numbers itself were very strong. We were talking about how Motilal did well or some others did well. Look at Nuvama's numbers. Total income up 46% at 953 crores versus 649, and net profit up 79% at 221 versus 123. The stock has had a fair degree of a run-up in the recent past, but maybe justifiably so. So keep that in mind. Could do well again. And the third one is Sumitomo Chemicals. Now, sales were up 15%, which is fine, because the point is that there was volume growth, but there was pricing erosion. So sales are just up 15%, but they've done very well on the margin front. 19.2 versus 11.1 on the operating profit margin. Gross margins did very well too, as a result of which bottom line up 105% at 127 crores versus 62 crores. All of their target geographies, or most of their target geographies, are stocking up or restocking because of the Red Sea crisis. So the volume growth is looking very strong. The only problem is the key product prices are at 6-year lows. So unless the volume growth continues this way, we may not see an encore in quarter 2 and quarter 3. But that's for the management to say. For now, in quarter 1, they've done well and therefore could do well. So these were the top 3 on my list.
Just going to add a few smaller ones, but Jaiprakash Power Ventures, again, very solid numbers from them. Revenue might have been largely flat, but their profits have jumped 82%. Now, it probably is an exceptional item that's led to it, but the stock went home with gains of over 4% on Friday. This morning, of course, strong earnings. So it'd be interesting to see how that one plays out. I don't know whether Niraj or Tamanna mentioned Zen Technologies, because that again, quarter on quarter, lands up impressing. The stock has been an outlier in terms of performance. 1 month gains are 30%. Hit upper circuit on Friday as expected, but Mr. Atluri has done it again. Strong earnings from their stable profits are up substantially, about 111% to come in at 79 crores versus 37.6. And revenues have also seen a significant jump, 80% higher at 254 crores. So this one, I think, on opening, would be hitting upper circuit again. So may not give too much of an opportunity to trade the counter, and it's not in the F&O space, viewers, but on the cash market, this one is a clear standout. Apart from that, I know there are good numbers, but let's quickly highlight one bad one, and I don't know why they've done so badly. Spandana Spurti Financial. Huge disappointment. Profits are down 54%. Net interest income has increased 43%. So this is where the disconnect is coming in. On one hand, you're seeing profitably taking a hit, but net interest income has actually gone up 40%. So I don't know how the markets will want to view this, but guess we will try and connect with the management through the course of the day to understand why the digression in that sense.
Yeah.
Such are the very bad ones, but yeah, you first.
You have more bad ones?
Yeah, there are bad ones.
Okay. I have, yeah, the three I have picked for round 2 are pretty decent. Anantraj is one of them. Good numbers, solid numbers actually. Revenue up 49%. EBITDA has jumped up from 60 crores to 103 crores. Margins have also gone up about 300 basis points from 18.8 to 21.8. And net profits up 81.6%. So solid quarter for Anantraj. Watch out for that stock. Might have a very, very good opening on a day when the market seems to be market seems to be in a good mood. Exactly.
I think bulls will be spoiled for choice today, right? So you've got earnings, you've got strong breadth, you've got global cues.
Absolutely.
But I guess you buy anything, you're making a lot of money.
Yeah. Yeah, NTPC is another one which could see definitely a positive opening and good numbers for an NTPC. Overall, margins are slightly squeezed, but net profits are up 12.2%. Revenues also up 12.6%. EBITDA up 9%. What's worked is fuel costs have come down 15.8%, so that's been good. Generation segment revenue is up 14%. Installed capacity has increased about 4%. Gross generation, coal production is up 55%. So the highest plant load factors in coal and the lowest in solar. Average tariff has also increased minimally to 4.68 rupees versus 4.53 a year ago. NTPC is another good set of numbers. Dr. Reddy is also decent, not half bad. Revenues have improved nearly 14%. EBITDA is up. EBITDA margins have gotten squeezed and net profit is, I would say, flat to negative. But India growth has been decent, 15% year on year, led by the vaccine portfolio, which they've licensed from Sanofi. So excluding that, the India growth is in single digits. So that's one to watch out for. North America sales growth of 20% has been good, partly offset by price erosion, which is a big issue for that market right now. They've also had other factors which have resulted in weak operating cash flow. But in all things considered, not a bad set of numbers for Dr. Reddy's.
By the way, speaking of PSUs, BHEL, 10,000 crore order from Damodar Valley Corporation. It's a big one. Yet another thermal power station order, so watch out for that one. And I'll make it very quick without getting into details. The two names which are bad numbers, Sanofi and Intellect Design Arena, both of them have seen a margin squeeze. Bottom line numbers much lower than estimated. So watch out for some corrections there. And some very positive notes, by the way, on the two stocks which did really well. Cipla, Cities come out with a note, target price raised to 1820, and Shriram Finance, overweight, target price raised to 3200. So watch out for both of those names in the session today as well.
Shriram Finance, in fact, has tons of, that's why I mentioned it. They're from Nomura to Jefferies to Morgan Stanley. Everyone's very excited.
So if you're not looking at secondary markets, there's also enough and more action in the primary market. So if you've got lots of money, you're buying in the secondary. You've got 10 IPOs that open this week, not all on the main board. You've got 3 on the main board, 7 in the SME board. So it's a active primary market set up as well this morning. So if anybody thought that money was going to go away on the sidelines because margins do get blocked for primary market, none of that has happened on Friday at least. So that just goes to show you the kind of power and liquidity retail investors in India are sitting on.
Basically, you also need that supply to meet the kind of demand we've been seeing. So that's definitely coming in. But just a word on the F&O space and, another very important conversation that we saw Friday evening and we must play out a segment of that for you now, is this exclusive conversation that Finance Minister Nirmala Sitharaman had with NDTV Network's Editor-in-Chief Sanjay Pugalia. She spoke on her views on the security transaction tax on futures and options, and listen into the answer. It's very, very crucial, because she's saying that we haven't raised this tax for revenues. It's an indication. Listen in.
We strongly believe it is for the SEBI, the regulator, to do that regulation in the market, just as they've been voicing concern as well. Voicing concern about the speculative activity going on in the futures and options market, and also about the valuation levels. There are lots of commentary after that as well. So you're right in saying it, but our intent was just to make one indication. It wasn't so much for revenue, it is more for being sure that people realize that they're getting into high risk areas. But we leave it to this SEBI to give a soft touch regulatory approach to the markets, be it for the F&O or the cash market.
All right, and you can catch that entire conversation, of course, later in the day on this platform, but also on the website ndtvprofit.com and YouTube and all of the other social media platforms. It's time now for Editor's Cut, and this is the segment in the morning where we get you the story beyond the headline and the analysis that you might not necessarily pay attention to before the start of trade. The big story has to do with Ultratech Cement and the acquisition that it is announced of the promoter's stake in India Cements. It's rounding off something that it started not too long back. The question is it paying too much, and how will the street view this? Niraj, initial thoughts. Niraj and Sajid, of course, joining in with editor level insight on this conversation. But is it too expensive, Niraj? First question.
Well, you can argue. I mean, there are two ways to look at it. Ultratech's current valuations, this deal is lower than that. Is it higher than the valuation that they paid for acquiring Radhakrishnan Damani's stake? Yes, it is higher. So you can look at it both ways.
And even that was looked at as expensive. Well, $85 is the average. $90 is what they paid. Above 90 for a small portion of the remainder stake. 3%, I think, at $94. And now $120 plus dollars.
And that's the valuation for a greenfield setup, actually.
So the thing is that do you want to set it up greenfield and wait for so many years, or do you want to buy an asset when it is coming, which is a large asset? Now, I'm guessing the management made up its mind and did this. But the point is what it does for both the businesses, right? So one is for an India Cement shareholder, and I believe we'll have Ronald Sioni talk about this, but just my two bits very quickly. Yeah. For India Cements, the stock rallied 31% in the last 1 month, from 280 when the deal was done to the current price. The open offer is at 390. Yeah. I would love to ask Ronald whether an existing India Cement shareholder should tender in everything that she or he has, or should she still wait for going ahead. That is part one. For India Cements, it's a not as big a thing. Ronald will give that answer. For Ultratech, it's interesting simply because while they may have overpaid or what have you, whatever people say about it, but and again we'll ask Ronald about this, and Sajid might have some thoughts here, but the point is they get access to tremendous limestone reserves. They get a very high southern market presence as a result of Kesoram plus this per se. 11% was FY24 share. The share moves up to maybe 20-odd%. 28% by FY27 in South alone. And South may not be the biggest bang for the buck currently in the near term on pricing, but long term, South is seeing some tremendous global capacity. GCCs coming up, global companies setting up their own centers as well. Development is happening at a good pace.
Yeah, but I think more than that, it's a play of South, which companies are preparing for, and it's not going to come in next 6 months or 1 year. It will take at least 2 to 3 years, and mainly because of the Andhra thing, it's the place coming into
the new capital.
But the thing is that most of the new capital reconstruction will be linked to multilateral loans. So by the time those things come in and the infra project starts, it's 3 years, 2 to 3 years away. So yes, companies are consolidating their presence in the South, because the next growth maybe next 3 years is going to come from South. But yeah,
and so what you're saying is that by the time that comes on stream and by the time the requirement is there, they will have absorbed the cost of what some might say is an expensive acquisition.
It could be that, but India Cement asset is a very old asset. It needs a lot.
That's the point.
It needs a lot of capex to go, and it needs a lot of working capital as well. So at $120, if you're acquiring that on a blended basis,
blended is 103, right?
103 and 120 means if you remove, if you take into account that open offer, there won't be much of takers of open offer, then 103, otherwise 120 it goes to. But point is that it is going to be a big investment from Ultratech's end. Ultratech is already sitting at 5,000 odd crores on a net debt basis. With Kesharam in play, with India Cements in play, the debt is going to net debt is almost going to double, which is comfortable from a balance sheet point of view as we speak. But point is that if the southern price market doesn't improve, then the strain is going to come on Ultratech's balance sheet going forward. So next short term, 1 to 2 years, is going to be some pain.
Important questions to ask, Niraj.
Yeah, important questions, and we'll ask Ronald about this, but just one question, keep an eye out for now the other companies, Orient Cement and the other Birla Group companies which are potential acquiring candidates, because those could be in focus today as well. But maybe, Alex, we want to get in Ronald into the conversation.
Yeah, absolutely. Initial thoughts, Ronald. We've been debating whether this is too expensive. Of course, Sajid's argument is that if you look at when this will come into play, 2 to 3 years down the line, with that demand pickup expected from South, then this is something that is warranted. What's your thought?
Yeah, definitely. I too concur with the view, because Adani's group's move in the southern region, you would expect a similar kind of acquisition by Ultratech also, because it wants to maintain its leadership position. Also, its capacity share and in the industry share was lower, as 15% and 11%. And both this acquisition would help its domestic capacity share in the southern region to about 27% and industry capacity share over about 24%. So it balances the whole regional share. Apart from this, you said that limestone reserves are also a very critical point here. Thirdly, you also touched upon southern India, especially Andhra Pradesh, getting limelight in the budget. So a lot of investments are expected in terms of development of financial capital or industrial corridors or, Polavaram projects. So a lot of investments over the next 3 to 4 years we would be expecting from Andhra Pradesh especially.
But Ronald, what about the argument about it being aging assets, old assets for which they are paying prices that are normally seen for greenfield projects?
That is true, but Ultratech is also known, for a faster turnaround of assets. Yeah, within, a shorter period of 1 year, around 1 year, they can turn the assets, into good profitable assets. We have seen in the past how they have, turn around assets which were not at par with its operational profitability, were not at par with Ultratech, but it has brought those assets to its at par. Right. So I think the same thing should happen here, and in a shorter period of time, the profitability of this asset should be at par with Ultratech.
Ronald, Ronald. Good morning, Niraj here. Making this slightly quick. So I'm asking you a pointed question. What should an India Cement shareholder do with the open offer at 390?
I think they wouldn't, much takers for this offer, because they know that, post this acquisition, there will be big plans, and, how the operational profitability would turn around, and there could be a higher valuation for these assets going ahead.
Wow.
So, they most likely may not take.
So not to tender is the point you are saying in the Ultratech open offer. If your clients had large shares on India Cements, you would argue, let's not tender, let's wait for some better results to come in. Okay. And what about Ultratech though? The stocks have rallied a little bit, but it's adding serious capacity. Is that a good one, or would you choose other companies within the cement landscape?
Ultratech's valuation, they have reached historical highs. So whenever there is a 5 to 10% odd correction in the stock, it's a very good opportunity to hold, Ultratech, to buy Ultratech and keep it in your portfolio. But yes, smaller players, depending upon, but that is a very speculative trading at this point of time. But regional players, smaller players could give much more, profits compared to this. But yes, as a portfolio stock, as a large cap player, Ultratech would remain in the portfolio whenever there is an opportunity to buy.
Ronald, last question from my side, and maybe if there are more than Niraj can take or Sajid can take, but last question from my side, would this be more or less the close for the consolidation phase for Ultratech in your opinion, or are there more acquisitions that could happen? And here I want to talk about what Sajid mentioned on the debt front. Does it have the appetite for more?
Yes, definitely. There is an appetite because, over the next 3 to 4 years, there will be strong operational cash flows. Only the key, monitorable is the cement prices. They shouldn't, correct or see downward trajectory much more than expectations. If the cement prices are, at least stable, then, operating cash flows would come up and they should be, they are good, they will be good, with these acquisitions. Because the key highlight for the next 3 to 4 years is the demand trajectory. Until and unless there is no, headwinds in terms of demand, the cement sector is poised for a very good operational profitability going ahead.
Right. Thanks so much, Ronald, for taking the time this morning to talk about the hottest deal at the start of the week, at the very least. There's, of course, more that we will talk about before the start of trade, primarily the F&O queues and whether or not we could, in fact, hit 25,000 on the benchmark Nifty 50. That's lined up in just a bit from Niraj, Sajid and myself. That's a close on editor's cut, but do stay tuned. Lots more coming up after this very quick break.
Welcome back. This is India Market Open. Well, we are taking stock of the futures and options space. It was a very, very strong Friday. And the question really is, can that momentum take us and can that momentum take the Nifty to about the mark of 25,000. Let's see what the indications are at the moment. Now, the Nifty advanced by around 1.8%. It's not every day that without a substantial trigger that you do see the Nifty move higher by around 1.8% on an intraday basis. That happened last Friday with about a 9.5% added in open interest towards what looks like longs at the moment. Now, as far as the Bank Nifty is concerned, it was a relative laggard. In fact, the reason we saw strength in the Bank Nifty was essentially because we saw strength in the markets across. And there was also a tad bit of short covering there. So a lot of traders out there perhaps were forced out of their short positions as far as the Bank Nifty goes. But I want to take a look at how things panned out when it comes to the options market as well. And on expected lines, there was a substantial amount of traction when it comes to put writing. And in fact, the put writing came all the way to the mark of 24,800, which begs the question, can 25,000 be conquered in today's day of trade? Now, let's pull up your overall open interest as far as your Nifty is concerned, and you will notice that the 25,000 call still has considerable amount of open interest distribution. Should we see the Nifty open about 25,000 and should it sustain about that mark or for the first 1 or 2 hours of trade, you will start seeing a lot of these short calls being unwound, which could potentially send the Nifty even higher. And of course, on the lower end, we'll continue to likely see a little bit more writing moving up higher as far as puts are concerned to 24,600, 24,700, should we continue to see strength. Now, but these are assumptions, and the Nifty has to cross 25,000 and sustain above that mark for these factors to play out. But this is just one scenario. Let's move on and talk about stocks. Now, it was a day of trade where we saw a lot of gains across the markets, a lot from the broader markets too. So longs for India Cement, Apollo Tyres, Manappuram Finance, TVS Motor Company, Escorts. Even in terms of stocks, we saw unwinding, a lot of short covering for Ashok Leyland, Tech Mahindra, Syngene International, Petronet LNG and JSPL. The question is, what do you do with these markets? Well, let's get in an expert opinion here. We have Milan Vaishnav of Gemstone Equity Research joining us on the show. Milan, morning. Thank you so much for joining in. What's the way forward here? How are you playing the indices now?
Very good morning, Avram, and to all the viewers. The thing is that I'm looking at Nifty with, more than one perspectives. If you look at the week that went by, we had one of the most interesting reactions to the union budget, because on the budget day, markets just swung 400 points on either side. I'm using the word just because at 24,400 point is not much from a percentage point of view. But on that day, VIX slumped by almost 18%. On the next day, market simply consolidates and VIX slumps another 8%. So it shaved off almost 24% in just 2 days. So that reflected the sense of, calmness in the market. There was no anxiety, nothing. And on Friday, we saw a very strong surge. Now, that being said, there is no disputing the fact that we are in a very strong uptrend. The markets are slated to open higher today. Now, what I see happening is the markets opening very near to 25,000, but the intraday trajectory that the market forms, and its behavior vis-a-vis the level of 25,000 would be important to watch. I expect some resistance coming in at 25,000 because it remains a psychological mark, as well as maximum call OI is still concentrated at that point. But at the same point in time, if 25,000, if it gets taken out, then we certainly have some room for ourselves on the upside. But that is not yet happened, and I would prefer to stay reactive to the market rather than staying predictive. So what I'll do is that I'll watch out for markets behavior vis-a-vis the level of 25,000, and any up move from there on, I would be using it more for protection of profits at higher level rather than chasing the up move to buy more.
Right, Milan. So based on that, are you still playing a short triangle at any point in time?
Yes, I would still would be going for a short strangle. I would be writing 25,300 call and 24,400 put. But for the next week's expiry, that is of 8th August, Total premium that we would receive would be 114.30, and that is expected to give a potential yield of around 3.5%. And as a measure of risk management, we will exit this call if 25,300 gets taken out or 24,400 is violated.
All right. That's as far as the Nifty is concerned. Milan, what about Jubilant Foodworks? I believe you have a view here as well.
Yes. In this overheated market where we remain quite seriously or significantly deviated from the mean, my approach is a bit defensive. And I'm looking for the charts that are showing some good promising setups on the chart. And for that, I have Jubilant, a buy view on Jubilant Food. One can initiate a call spread by buying 580 call and selling 600 call and paying a net premium of 7.8. In this equation, maximum profit potential here is 15,220 and maximum loss that we can face here is 9,750. However, we can keep a protective stop at 565 and one can book the profits if we see Jubilant Food moving past 600 rupees.
Okay, so bull call spread for Jubilant Foodworks. Milan, on that note, taking a moment to thank you for joining us and taking us through your views. And of course, giving us a handful of option structures to work around with. With that, it's back to you all.
All right. Thank you so much for that, Agam. And, it's going to be an exciting morning. Let me quickly pull up the implied open before we get to our speakers today. And we have a variety of views for you on a very exciting day. 139 points up on the Nifty. So it's rock and roll this Monday morning. That's what's expected. What should be your strategy? Soni Patnaik joins us to talk more about it. She's AVP at JM Financial Services. Khush Bora, founder at khushbora.com, joins us, as does Chakri Lokpriya, managing partner at Red Strawberry. Welcome to all of you and a very good morning. Soni, let me start with your take on what are the kind of levels you're seeing for the Nifty and the Bank Nifty today.
And good morning, Tamanna and everyone. Thank you for having me on the show. I think Nifty is on its own trajectory against all odds. It's heading for 25,000 mark, as is implied by the GIFT Nifty implied open today. Anywhere around 25,000, where the maximum call writers were present at the start of the series, they are still hanging on to that level. So there could be some resistance faced around 25,000. Maybe it does not cross that. Maybe it crosses that. If it's able to cross that, we can see a round of about of short covering towards 25,200 as well. However, failing to do so, there could be a profit booking coming towards 24,700, 24,600 odd levels, which is going to be on a healthy line. I think it's just wise to remain cautious and not to chase the gap up that can happen today, that may happen today rather, and just wait for a couple of minutes after the market opens, let the data stabilize and see how the call put writers are acting out in that gap up opening, and then we can take a call whether to continue with the buy or just to book some profit and stick to stock specific strategy.
Okay, so stock specific strategies on is the name of the game, and definitely would be. Kush, quick word on the indices before we get to stocks.
Hi, Tamanna. First up, a very good morning to you and everyone on the panel. Just on a very light note, I think the real reason for the markets moving higher on Friday can only be found in the realm of spirituality, where things happen and we assign meaning to them. But that aside, I think this serious flush of liquidity won't probably let markets go down so easily. So I think while we can have our cautions on the indices and on the markets, I think never has perhaps such a big cautious outlook or consensus trade on the markets been wrong in such a big fashion. So I think while we will have that caution because some indicators are perhaps showing that, we will continue to respect what the price is telling us, and that is saying that there is serious buying at lower levels, at least for the near term. Nifty is in an uptrend, so stay with the trend. If I have a position on the long side with the kind of moves that we saw on Friday and what we are seeing today, I think I'll be perhaps booking profits partially. As far as Bank Nifty goes, 51,800, 52,000 where the 20-day moving average resides, I would want to see that taken out before I create any fresh long positions on the Bank Nifty. So for Nifty, book partial profit at the gap up today, hold the rest with trailing stop losses. And for Bank Nifty, for fresh positions on the long side, wait for 52,000 to be taken out.
Okay, so you are possibly going to see now an up move in the Bank Nifty. Remember, it did not participate in Friday's up move to the same extent. Before I get to Chakri, let's quickly get the stock picks. Sonia, I'll start with you.
So the first would be in Concord, can buy at current levels, keeping a stop loss of 1020 and a target of 1070, and a second target of 1100 can be seen in Concord. So Concord, it made a high on Friday's closing around its 10-20-50 EMA, which is trying to cross all at par. So if it's able to cross these resistance, you can see a very sharp rally towards 1070 and 1100 odd levels. So those are the targets, and the risk reward ratio is also coming out quite favorable, with 1020 acting as a very good support. The second pick would be from the pharma space, Lalpath Labs, which has seen 90% long rollovers from the July to August series. So Lalpath Lab is on the verge of a multi-year breakout at current levels. It's consolidating. That range breakout is yet to happen, and when it does, you can see it heading towards 3200, 3250, which is the target. One can buy at current levels, keeping a stop loss of 3000 and target of 3200, 3250.
Right. Chakri Lokpriya as well joins in for a fundamental view on the markets. Chakri, I don't know if there's any merit in me asking you what is the opinion on the markets at this juncture, because very clearly, I think even before the budget, every fund manager worth its salt believed that this was a sell-on rally, better entry levels would be around the corner. Most were circumspect. I don't remember talking to anybody who said go out and aggressively buy the street, right? So let's share a view on the index if you have one, and if not, then let's go with what did you make of ICICI Bank's earnings?
Good morning. At the index level, it trades at probably about 21 to 22 times. That is the Nifty. And that's in line with, let's say, the 5-year average. Now, the only thing which has happened pre and post budget is the cost of equity has gone up. It's gone up by about 5-7% because of the higher taxes, both short-term and long-term. And this, while has been ignored, not taken into effect by the market, will show up when it comes to capital raisings as we fast forward into the future. Now, at 21, 22 times, is the market expensive? No. If you look at ICICI Bank's results as an indication, that company trades at about 2.5 times book value. Its loan growth at about 17-18% was decent. Its deposit growth was okay, and asset quality was fine. So, which means to assign a 2 and being a big index component of the Nifty at a 2.5 times book is not expensive. And so that story can be replicated across various components of the Nifty. So if you look at it from that perspective, the Nifty is clearly not overvalued.
Okay, well, it's not overvalued, and even price to book the Nifty is, I believe, not overvalued. But Soni, I'll come to you on ICICI Bank on the charts. I think a lot will rest on ICICI Bank today to help the Nifty scale to 51,500. What do you feel the trade is looking like there? Is there an opportunity even if one gets a gap up on iBank?
Definitely, Samina. Last week also when we spoke, when we were a bit cautious in Bank Nifty, the only bank that I stood out for, which was looking sort of decent on charts, was ICICI Bank. And even now, I feel that the stock has a good potential to head higher towards 1250, 1260. It is holding on to its good support of 1180. So that's a very strong support that can be seen even in options metrics for ICICI Bank. As long as it holds and defends 1180, the stock can remain in a consolidation mode between current levels to 1250, which puts in a good risk reward ratio favorable level at the current status right now. So at buy, one can buy at current levels around 1210, 1220 range. Keep a stop loss of 1180 and a target of 1240, 1250 can be seen.
Kush, what about you? What are your top recommendations this morning? There's so much to pick from, right?
Indeed, and we've done away with the short calls for now. So both on the buy side, Deepak Fertilizer and HCL Tech, are the calls. For HCL Tech, I think on the upside, you could look at targets of 1650, 1665, beg your pardon, on the long side. 1620 is where you place your stop loss. Deepak Fertilizer was also doing well. We did see some sort of profit booking towards the close, but on the whole, the trajectory is upward. So for Deepak Fertilizer, the near-term targets would be 880 and 895, and your stop loss would be at 845.
All right, Chakri also with us this morning. Chakri, let's talk a bit about the financials and the banking earnings on our radar. In fact, Harsh is also joining us for more on that. So we'll go to Harsh first and then come back to Chakri with his view on some of those specifics. Harsh, a whole host of numbers, some good, some bad. Any ugly?
Well, yes. So one in particular that stood out on the adverse side of it was IndusInd. Tamanna, you saw margin contraction, of course, which is not much of a concern as much as the asset quality issues are. So, of course, IndusInd suggesting that they will likely be considering and looking to improve on some of those metrics. But nonetheless, the picture not looking great. First off, on the other income side, card fees was a miss. Also, new card acquisition rates were lower. And the slippage was up almost 8% on a sequential basis. 1540 crore is where that slippage has come from, and a lot of that has come from the consumer finance book. So out of the 1540 crore of fresh slippage, nearly 1490 crore has come from the consumer finance book alone. And that to me is a concern, because your vehicle finance portfolio in IndusInd is quite large and is a good lever as well. In fact, disbursements there grew 2% sequential, 15% year on year on that higher base. So that may continue to probably be a challenge. The other piece with regard to the slippages itself within vehicle as well, the core vehicle finance portfolio saw a slippage of 660 crore. Credit cost expected to be between the 110 to 130, so nothing changes there, and that could possibly be a positive out of all of this. But the numbers surely a miss, around a 10 to 15% miss at least on the profit after tax number, given the higher provisioning they've done this quarter. So well, that's the picture with regard to where IndusInd is concerned. A strong growth expected, and LDR also inching up to 87%. Where ICICI is concerned, very strong quarter. They've held up on the ROAs, 2.36% ROA that ICICI has. They've been able to hold on to that. That, according to me, is the key positive, because you are seeing margin declines across the board, especially for the larger private sector banks. Kotak saw 20 bips margin decline. ICICI just about 4 bips, 0.04%. And therefore, it's a strong quarter both on margins, where they've held up, as well as operationally, where operating profit was a beat, which has actually translated to a PAT beat. And therefore, they've held up on the ROA on a sequential basis on the higher base, which is very, very impressive. So ICICI continues to churn out as the most impressive of the top private sector banks, just in terms of the way in which it's delivering numbers. 16% growth on advances, deposit growth also 15%, pretty much balanced on the advances to deposits as well. Of course, sequentially, there's a bit of a mismatch, 3% sequential on advances versus 1% on deposits. So that will keep a lid on growth. But nonetheless, it's a very strong overall set, because the performance as well as operationally, the performance has been strong. Those are the two top private sector banks, Tamanna.
All right. So a lot to unpack over there. ICICI Bank is the champion so far. I think Shriram Finance also, I might say, a good start because of all of the brokerage notes which have come in. We'll get a view from all of our speakers this morning, but very short break. We'll be right back with the pre-open rates and more. Stay tuned.
right, back with India Market Open right here on NDTV Profit. We are within sniffing distance of 25k. The question is, what post that? I'm assuming as if we will hit it. Let's wait and watch. But you know, it's a good morning for trade for sure. Now, our guests are with us. Chakri, I would want to start off by talking about the kind of reactions that some of the stocks got post their numbers yesterday. And 2 or 3 of them have got a very strong thumbs up from the analyst community post results and con call. Shriram Finance and Cipla being the 2 of them. Chalk and cheese, 2 different sectors. Do you look at them individually, either of them? What did you make of those numbers, and what should an investor do now with those names?
You know, if you look at Shriram Finance, the numbers were very strong. Asset AUM growth was about 20-odd%, and their MSME held up. Now, if you look at versus IndusInd Bank, similar segments of the business did not do well. So it's clearly come down to within the banking sector, you know, individual companies are doing their own thing. It's no longer a sector wave which is holding up all banks or bringing them down. Same thing, for example, ICICI results were not so, Axis results were not so good, whereas ICICI Bank results were good. So, if you look, therefore, I think, you know, that's the way, you know, we are approaching banking sector. So, Shriram Finance, I think at current levels, even the valuations are still okay. So, we would still buy it. On the other hand, like an IndusInd Bank, we would stay away from.
Okay. And it'll be interesting to see what the day today throws up for these names, but pretty strong moves out there on Friday. And let's see if Shriram Finance has some upticks in the session today. The other aspect is, Chakri, again, fundamentally, these wealth management businesses. Thursday or Friday, we saw Motilal Oswal come out with this spectacular set of numbers, did very well. Nuvama Wealth over the weekend has come out with numbers wherein the total income is up 46%, net profit up 80%. Again, a strong set of numbers. What's happening with this bucket? Because this may not be as impacted as the brokerages when it comes to the SEBI moves and regulations that are coming in. Are you a buyer into the listed wealth management pockets?
The wealth management industry has, and therefore the earnings of those companies have done well. But this is, you know, the results that you see pre the new SEBI, not SEBI, the budget after taxes, which have gone up. That impact will clearly, slow down the market because the cost of equity across board, which, many pockets do not seem to realize or have factored in, the cost of equity has increased by the extent of the LTCG as well as the short-term capital gains tax. We even see basically it's both traders, speculators, forwards, futures, and long investors together to come up with a price discovery of one single price. And that goes towards capital formation. So when that capital formation cost has gone up now post the budget, businesses will slow down, whether it's Nuvama or Wealth, Motilal, all in the coming quarters, you will see it.
Just a quick check on ICICI, that's Nuvama, pre-open trade, 11% higher. A quick check on ICICI Bank as well. Remember, they reported very strong earnings on the weekend. The stock is up 3%, but remember, it's a heavyweight. So that sort of a move is actually not something that comes in easy. For a bank such as this. Dr. Reddy's has also had a pretty good quarter. The stock is going to be slightly higher. I think a 3% gap up is what it was looking like now, about 2% high is what we have. But Sony, you want to come in on a couple of these, there are actually so many names, right? I don't know whether you talked about insurance companies, but do any of them still look good? So if you're a swing trader, what would you buy into for an intraday trade on the insurance players?
I think insurance, SBI Life and HDFC Life is still looking quite strong. Even ICICI General Lombard Insurance is looking quite strong. All of these stocks have particularly given a very strong breakout. They have moved also very strongly in the couple of days. But for intraday basis, I think we should keep an eye on SBI Life for the day, which is looking quite strong. In fact, it is still holding above a very fresh record high. And, from current levels, 1720 is a good support. So if it's able to hold on to 1720 for intraday, it can head towards 1800, 1820 odd levels. So I think that's a stock to look out for on an intraday basis.
All right. What else is moving on intraday basis? I mean, the bank Nifty is one which we need to keep an eye out on ahead of opening? Are we going to make it to the 25,000 mark is the question. ICICI Bank, of course, flying. Look at a PNB, look at an IndusInd. Let's pull up some of those which are in focus. HDFC may be having a tough morning. PNB, fantastic. Again, numbers impact. IndusInd, the initial view is not that positive on the numbers, but doing okay at this point. Shriram Finance is something that I want to see. What is happening with the Shriram Finance with all of those brokerage upgrades? Fairly flat right now. Nothing too exciting happening. Kush, just specifically on some of these counters, and let's start with the Shriram Finance. What is the kind of strategy you would have?
Well, continue to maintain any long positions that you may have. Twice we've seen rejection from that 3050 level. So perhaps, that's the level to watch for on the upside. The bias is very clearly positive, but I think any kind of big move will come, once this 3050 level is taken out. So if you are in for this from a medium to a long-term perspective, then most certainly, this will perhaps be, a speed breaker at best. So continue to hold your long positions. A positional stop on this one comes in at 27.50. And as I said, the momentum pickup will happen once 3050 is taken out.
Right. Okay. What else? There is Bandhan Bank, which is starting off the blocks with a bit of a sprint, really. You look at the banking stocks in focus today, and Bandhan is right out there. There is a Jefferies note with an upgrade, 5.5% higher for Bandhan. So that's the first one. And a newspaper report suggests that L&T and Valor Estate, or DB Realty is now called Valor Estate, have signed a pact for a 20,000 crore project, wherein their share is 40-odd%. So we should pull up DB Realty or Valor Estate, up about 3%. So that's the other one to keep an eye out for sure. Actually, Kush, coming on Bandhan Bank, it is starting with the bank. 6% higher already. But what are the targets that you might be watching out for, assuming that it starts off between 200 to 203?
So, Niraj, I think it was on Thursday, perhaps Friday, that we initiated a short call on Bandhan Bank with the stop loss at 195. So I'm assuming, with the gap up, that'll be taken out. Now the stock's entering this congestion zone where, from about 198 to 205, there could be some resistance coming in. This was one of the weaker banks of the lot. It was moving below some of its key averages. So I think I'll hold up any kind of fresh long positions. If I have any, then perhaps I'll look at this as, a profit-taking opportunity. 208 is where the 200-day moving average resistance will come in. So a fresh long position at the moment is not warranted. But if you have any long positions, take this as an opportunity to, book some profit.
Well, if you have the chance, book your profits on this one. That's the word coming on Bandhan Bank. It's a 6% gap up. At least that's what we're picking up in pre-open trade. Interglobe Aviation also reported numbers after market closing on Friday. The stock went in the earnings strong, but of course the markets don't seem to like what they've got, at least in terms of the headline number. Even though when you do a deep dive, the numbers weren't actually too bad. Sony, do we have a trade on this one at all, on Interglobe Aviation this morning? It's a flat start, but I guess once the market absorbs that the numbers are actually pretty good, it may be an opportunistic investment or an opportunistic trade.
Samina, for Indigo, we must wait until 45.20 is taken out on intraday basis. That's a resistance. Friday's close could not cross that level. Even today's pre-market open is not indicating that it can cross that level. So just better to wait and watch 45.20 resistance. If it only takes out, then one can see it heading towards 4600, 4615. I think that's the level to watch out for. In either way, the immediate support for Indigo stands around 4420. So I think that's also going to play a crucial level for the day. It's either break or make level of either of these range side.
Right. Well, I did catch up with the management of Interglobe Aviation. Remember, it's the only listed aviation player in the country, and with the kind of conversations around capacity expansion, ATF prices, uptick in revenue, you heard what the management said, because they seem pretty optimistic of maintaining their growth target for FY25 and do believe that the road ahead is much more glorious than what was seen behind them.
What we have seen for this quarter is actually a continuation of what we have seen in the last couple of quarters, a very solid and healthy growth with a 18% growth in our net income, totaling 202.5 billion rupees. and with that, a very solid profit margin of 14%, which comes down to 2,700 crores of profit. So in fact, this is a continuation of what we have been doing for the last 6 quarters. So this is the 7th consecutive quarter now. We're posting some good and very solid results against a market situation which is still positive from a demand outlook, but yet is being confronted with some challenges when it comes to rising fuel costs and some of the global inflationary pressures.
Peter, thanks for that. Just a quick one. While it's been a good quarter, and of course you've done as well as you'd expected to do, can you break that profit number for us? Because there is a decline on profitability when you look at the year-on-year number. What's the reason for that?
Yeah, well, year on year, indeed, there's some variation. But I'd like to highlight actually that last year, Q1 was a very specific year with some very specific dynamics in terms of frictions between capacity and demand, resulting eventually into a very high profit number. If I compare this quarter to the last quarter, which is not totally fair because there are always seasonal effects, but we see actually a very solid and even improved profit situation. So year over year, yeah, there's some dynamics, but going forward and looking to this quarter itself, actually, we see a profit which is robust. Looking at that profit situation, clearly, again, the headwinds we saw on some rising fuel costs, forex cost, and even the aircraft grounding, if we take these factors into consideration, we feel very confident about these results which we have posted here today itself.
All right, Peter Elbers on the quarter gone by and his outlook. The stock not doing too well this morning, but they have had a year-on-year profit slip. And perhaps that's what the street is also looking at. Meanwhile, your pre-open session has ended, and while we'll wait and see what kind of an up move we see, the Nifty, at least in the pre-open session, not quite making it to 25,000. Nothing to sulk about, definitely, because you're still 108 points up. We'll see how we finally open, though. What is seeming to work this morning is definitely IT once again, banks as well. These are going to be the two spots to look at. But look at the realty stocks. Realty stocks also doing fairly well, like the BSE Realty, for example, completely zooming, Phoenix, Sobha, all of them also on the radar. Soni, just from what you've seen in the pre-open session, anything that you would pick or stands out for you?
In reality, I think I would still just wait a while. These entire sector is just seeing that it's reversing. However, data has not suggested any sort of form of short covering just yet in any of these stocks. So it's just better to wait out for these stocks and I'll wait for a day or two until data stabilizes. However, on a very key note, I would be keeping a special eye on DLF at current levels. If it's only able to sustain above 840, 850, then there'd be a trade where one can, look forward to. The levels are yet to come, so I'll just keep a watch on it.
Look at some of the movers also this morning. RITES doing very well. Sumitomo, chemical stock we talked about. A lot of result impact kind of a move that we're seeing. A Bandhan Bank we spoke about, Keynes Technology. These are some of the winners really this morning. Kush, when it comes to a Keynes Tech, for example, what is the kind of outlook that you would have?
Well, after a brief round of profit booking, I would say the stocks actually, rebounded quite well. There's a possibility that, we might face some sort of a resistance at this opening mark. 4,500 is a level where the stocks sort of resisted previously as well. So not a bad idea to, book some profits, at least partially, hold the rest for targets of 4,700 and above. So take this opportunity, of the turnaround in the trend and the gap up opening to, book profits partially and hold the rest, as I said, for 4,700.
Right. Chakri, you want to come on the Ultratech India Cement deal announcement? Of course, this is subject to clearance of the Competition Commission, but what does this mean for Ultratech shareholders and India Cement shareholders? What's the advice you have for them?
Yeah, clearly, post the now Ultratech increasing its stake to about 55%. It's become a two-company industry in the sense led by Ambuja and ACC, and of the Adani Group, and then the Ultratech of the Birla Group. Now, and clearly, so this industry is going to transform into a volume-led growth and not so much as a price-led growth, at least for the next couple of years. So where does that leave Ultratech? I think shareholders will benefit, and so will India Cements, because if they open offer at current levels, we'll probably still see some more upside. And, the shareholders have clearly done well. But this now, for Ultratech, it now reaches its target of south of about close to 200 million tons. But given that the competition is heating up, this whole story started off with Adani acquiring companies in the south. And so I think that story is set to continue across the country.
Got it. Well, flattish for Ultratech, no big takeaways there. Let's see what happens to India Cement post-open. Some of the winners like Shriram Finance, etc. are doing well. Keynes Tech has had a very strong reaction. I wonder what Zentech has done on open as well. So all of those will come into play. But here come the first rates, and I'll stick to the large caps first to see if the Nifty is within sniffing distance of 25. Okay. 24978. I think we should get some of the big market voices going as well shortly, because we are very close to 25,000. Okay. Maybe not very close. Now it's coming off a bit as well. But let's wait and watch. 24,960. So sniffing distance of 25,000. What a momentous day it would be, because we hit record highs on Friday. We might touch 25,000 in the session today. This is the big one. We should keep the Nifty at one end for sure. And just a few points away from 25,000 for sure. Mid caps and small caps, maybe they are participating. Should get them up about 1% nearly. For the mid-cap index, and the small-cap index should come up on your screen as well. Nearly 1%. Well, my eyes can't go off the Nifty somehow. Okay, let's quickly get the heat map and see what's moving and what's not on the large-cap space. About Shriram Finance, another 3.5% because of the brokerage upgrades. IndusInd Bank, the asset quality not as bad as the street feared, which is why brokerages were constructive. OMCs have gotten a bit of an upgrade from brokerages today. So BPCL is certainly reacting. I wonder if HP and RC also might have done well. NTPC reacting maybe a little bit to its numbers, or maybe there's the PSU pack being up because ONGC2 is in the green. So that's to be watched out for. An ICICI Bank, the big one, I think that is giving the max support to the index. What's not doing well? Power Grid, Titan, Tata Consumer, very few losers, a lot of gainers, but a tick of green all round. Not a bad one, 40 points away from 25,000.
It's an amazing race. 25,000 is an inevitability, but do we hit it right in the first 20 minutes or so is the question. Dr. Reddy's numbers. Numbers is the theme overall, if you see, and most stocks responding to those. We're definitely seeing the broader indices doing even better. I know the Nifty is the exciting top story over here, but it's not too shabby on this side as well. About 1% up on the mid-cap 150. The small-cap index, last when Niraj pulled it up, was nearly 2% up. Okay, come off a bit, about 1.5% up. Let's talk about specific stocks. Shriram Finance, I'll pull up just once again because the kind of up move that the stock has consistently been seeing continues even now. All of those brokerage calls moving in tandem. Let's look at some other ones. Keynes Technologies, Sumitomo Chemicals, all of those showing results impact. So this is a morning which is about results and the street rewarding companies which have done well. Nuvama and MCX is the other two that I want to see. Great numbers on both ends, and the stocks responding well as well. If I compare to pre-open, maybe come off some of those crazy highs that we saw, but steady morning and very positive morning. Intellect Design is the other one that I want to pull up. Again, results impact is what we're seeing here. It's a disappointing set of numbers, perhaps with 3% down. PNB and NTPC both doing fairly well because of their numbers. PNB is the stellar one over here, about 5% up. SBI Cards is the other one we'll pull up. That was a disappointment. In fact, one brokerage note talked about sell while you can, but think about it, the first response is not half bad, just about 1% down this morning. So it's all about the street gauging you on your performance, which is good. Even though people call this market exuberant, the response is very, very clearly as per what these companies have done. And of course, the broader indices looking very exciting this morning. We're about 53 points away as we speak from the 25,000 mark.
Yeah, and whoever said that the money is only going to go to the liquidity, is going to move to the large cap index, is going to probably take a step back, because the action and outperformance in terms of earnings is the broader markets. We've seen some phenomenal companies doing exceptionally well this quarter in terms of their earnings and also very solid outlooks as well. The broader market is trading much better than the benchmark, the small cap, micro cap and mid cap index all trading in with strong gains. Let's quickly highlight a whole bunch of companies that are moving across the Nifty 500. So IDFC, REC, RITES. RITES, of course, they've got a board meeting for a bonus issue of shares. The last time that this was all the way in 2019 where it was a 1:4 issue. RITES, RITES is what I'm talking about. If we can pull that one up on the screen, that should be useful. RITES on the screen. Well, you also have Ultratech and India Cement. RITES is up 6% on back of that board meet that has been announced. Ultratech is flat. India Cement is finally out of that F&O ban and on back of being acquired, the stock trades the gain of 1.5%. Zentech, I don't know whether we highlighted this one. Numbers were exceptional. The stock went in with hitting upper circuit on Friday and hits upper circuit once again this morning. But look at Bandhan Bank. Started the day with a 4% gain at a 9% uptick as we see it. 211 rupees, 210 odd is what we have on Bandhan. There's no stopping this one. The street really likes what they see with Bandhan Bank this morning. Jayaprakash Ventures, if I can pull that one up too, numbers were pretty good. The market may be disappointed or pleased. If I can get that on the screen, that should be useful. Spandana Spurti, I think Tamanna indicated already. Well, yeah, that's JP, 4% high is what we have. Spandana Spurti is down about 7%. PNB trades the gain of 5%. SPFC should be seeing some pressure. Interglobe Aviation has had it bad. Go Digit is up 7%. So lots and lots of big gainers in terms of trade this morning. Your biggest gainer is Bandhan Bank with a 9% up move. Raymond looks good. All your broader market PSU banks from a JNK to an Indian Overseas Bank are trading with marginal gains as we see it. MCX, Tamanna mentioned, but logistics like All Cargo trades the gain of 3.5%. Yes Bank is up 3%. All in all, I think, guys, I don't even know whether some of this is earnings or some of this is just sentiment. Because look at All Cargo. The stock is up 4%. We spoke to the management on Friday. And their monthly update was very average, was rather below average in terms of what they've done in terms of volumes. But the market, looking for opportunities, is rewarding the count of 4% as we see it.
I think it's also looking at management commentary and run-up. So Interglobe, one, let's just pull up once again, and that the losses have really deepened for Interglobe this morning. The numbers, maybe on the profit level, a bit disappointing, but overall not that bad for a company which has a giant market share, about 3% now. But yeah, the story of the morning definitely is turning out to be Bandhan Bank from every way you see it, and we'll try and play out some of those comments from the management because we spoke to them in just a short while from now. Paytm is the other one, after the run-up and some would say over-exuberance in Paytm, which we saw at the end of last week, and especially on Friday, because they seem to have had one big hurdle for investment from Chinese companies cleared. They got the clearances there. There was a news report that we broke. The stock has pulled back quite sharply, about 3% down. So that is hurting. Even on the Nifty, looking fine, but not really managing to break out to the 25,000 levels. In fact, let me just get a quick word from Sony. You are still about 60 points away, Sony. But do you see that resistance coming in to the 25,000 dream?
Definitely, I think we can see, Nifty just forming. The call writers have been quite active since morning, irrespective of the fact that 25,000 was almost tested today. You can see no major unwinding just as of yet. So I think it's going to be very dicey for at least an hour to watch out how the call and put writers behave around 25,000 level today, which is going to decide the fate whether it can cross and sustain above 25,000 or give it all up and just go for a profit booking from current levels. It's just a bit of a caution note, and it wouldn't hurt just to stay cautious at this level and stick to some stock specific strategy whilst indices figure this level out by themselves.
Just very quickly, Sony, and I want you to come on Bank Nifty. 51,500 was a very important level of resistance that we were hoping would get taken out with regard to ICICI Bank. But the top 7 of the top 15 movers in the Nifty 500 are banking names. Be it a JNK, IUB, ICICI Bank, Yes Bank, Bank of Maharashtra, you name it, and they're trading higher. What is the next level on Bank Nifty, and would it be wise to initiate a fresh long because key levels have been taken out as we see it?
Samina, it's very important to remember that this 3 days for this week, the next 3 days is going to be very crucial for Bank Nifty as it plays out its monthly expiry and the rollovers will take place. Bank Nifty is having a very stiff resistance around 52,000, 52,200, and until and unless it's not able to cross these levels on a closing basis, it may continue to see the selling pressure on higher levels. So Bank Nifty is not completely out of the woods. It may consolidate between 52,000, 51,000 if it's not able to cross the resistance. However, it still does not become a buy. I think it's going to play out in a very sideways trend till the rollovers take place finally, and then we can see the next trend for other series.
Kush, what are you making of Bandhan Bank and the kind of runaway we've been seeing? Not just Bandhan. Look at some of the other movers. Orient Cement. I mean, we've been talking about Ultratech and India Cement, but the other one on the block, or possibly on the block, is Orient Cement. And Valor Estate is a stock that Niraj also talked about, which could move up. That's showing a bit of action in the micro-cap space. Any views on these three?
So, what's happening is that the markets are not able to sustain the, gap up opening. This could perhaps just be the BTSC pressure because, we saw a very big unexpected move on Friday. I think there'll be a second round where the buying will come in. Perhaps, we could approach the 25,000 mark once again. Bandhan Bank has given away, some of the gains, and the 200-day moving average of, 208 is starting to act as a resistance. So, as I said, on Bandhan Bank at least, I will take the money home, not create any fresh long positions. Orient Cement, this is the one that has seen quite a bit of, congestion or rather accumulation, and we're seeing a breakout. This momentum could continue. Hold existing positions for targets of 380. Any fresh entry could also be considered for targets of 380, and the stop loss comes in at about 345. So continue to hold, Orient Cement. As far as DB Realty goes, again, a very broad range here of about, let's say, 198, 200. If I round it off to about 220, so we're at the upper end of the range. So I wouldn't initiate any fresh long positions. But yes, if I have any, I would continue to hold on.
Okay. Chakri, financials you mentioned might get a thumbs up. They are getting a thumbs up, and how? I mean, ICICI Bank may be the biggest bond contributor, but Bandhan and some of the others. I mean, are you a buyer here? I repeat the question that we asked you at 9 a.m. But are you a buyer here?
Clearly, it's become more company specific. It's not a sector specific anymore. I think, for instance, HDFC Bank, you wouldn't buy. ICICI, you will buy. Shriram Finance looks good. Some of the NBFCs are still looking fine. REC, PFC, their numbers are good. So I think that's the approach for the banking. So overall, I think, and the sector is not overheated at all. The valuations for ICICI Bank is only at about 2.3 times book. So clearly, there is enough on the runway to take for further upside.
Right. In fact, a colleague did catch up. Vishwanathan Nair caught up with the management of Bandhan Bank, MD and CEO Ratan Kumar Kesh, about their first quarter performance and, of course, the outlook for the bank going ahead. Listen in, because the markets are definitely giving this a thumbs up.
Q4 on an operating level, we did a great performance. The fact that we had decided to write off an old portfolio, so it looked a little muted to that extent. But our momentum of continued growth with focus on quality continues. I think we've been able to continue that momentum in this quarter as well. And if you see, every year, quarter one is generally quite muted for Bandhan Bank because of the cyclicality. This year, in quarter one, we have been able to marginally grow our advances, which is a good news. And that is because of multiple factors. One of the key one being some of the guardrails that we put in place, let's say in April 2023, in order to improve our portfolio quality. That took a little bit of a time for the market to and the team and the distribution channel to appreciate. Sure. I think that has been consistently improving over the next 4 quarters, and therefore we continued that momentum in this quarter as well. So that's one important area. Second, I think our focus on improving credit quality and collection efficiency has improved. Although there is a slight bit of deterioration in the collection efficiency in quarter one because of heat waves and some of the other factors, but overall it's remained quite healthy. And the fact that the portfolio quality has improved, our provisions have come down significantly.
Okay. I want to break this chat up into 3 primary categories. We'll go with advances, we'll go with deposits, and then we'll come to the operational metrics like your NIM and NPA and all of those factors. On the advances front, 22% year-on-year growth, but quarter-on-quarter not that high. I'm assuming this is because of Q1, as you mentioned earlier, heat waves and a few other issues. Lenders outside of Bandhan Bank have pointed out that elections have led to some amount of slowdown in business as well. I'm assuming that's reflecting in your collection efficiency as well. What is the advances runway looking like for the rest of the financial year?
Yeah, our quarter one is generally, if you see in the last 2 years at least, the quarter one always sees a degrowth compared to the quarter four. This year in quarter one, we have been able to deliver a stable advances growth. That's one. But our quarter three, quarter four continues to be the best quarters, and somewhere in middle of quarter two, we should see the more advances uptake. So therefore, we will continue to see the better quarters in the next three quarters in terms of advances. That you should get to see.
Okay. If you look at the segmental breakup, housing and EEB group, which is your MFI business, those have shown a bit of degrowth. But having said that, on the other hand, retail and commercial banking have actually grown quite strongly. So is there anything that is structurally changing at the bank, or is this just a quarterly dynamic?
It is clearly a quarterly dynamic, and housing, if you see quarter one of last financial year, compared to that, the quarter one of this financial year, there is significant growth. EV, compared to quarter four, there is a degrowth. But again, quarter on quarter, if you see YOY, there is a growth.
Okay.
But of course, as part of our stated strategy, our secured book will grow, and the EB book will grow at a lesser rate of percentages. In other words, retail and commercial will grow at a much faster pace than the EB book. And that's our stated strategy in terms of our product mix and diversification strategy.
Where do you want to see the mix, secured versus the rest of the business?
So I think our FY27 guidance is that we will go closer to 50-50 or maybe slightly higher than that. So our secured book will be more than 50% and unsecured will go down to below 50% over a period of time. But that we have to do in a calibrated manner, keeping in mind the NIM impact and the overall strategic other guardrails in the league.
Correct. Coming to the deposits question now, of course, year-on-year 23% growth. I'm assuming that's. I don't think anybody else in the industry is growing at that pace, even though your base is smaller than the others. But I wanted to get a sense, on what the deposits duration looks like now. Last evening, the RBI came out with this LCR framework, which, it's a draft circular at this point in time, but they're suggesting higher runoff ratios, which may or are expected to, heat up the deposit war that is currently there amongst banks. How are you seeing that panning out?
Clearly, there is a bit of a stress in the deposit market in the banking industry. That's clearly given. However, Bandhan Bank's ability to garner deposits has already been established. Our franchise is very strong. And if you see in the last 18 months, we have added around 500 odd branches. These branches will now start to deliver. That's one. Okay. Second, I think we have finished our core banking migration in quarter two of last financial year. And now it gives us an ability to launch many more products and technology digitization. Specifically on the current account side, we should be able to launch the transaction banking products, whether it is CMS, trade, Forex, and some of those, which are work in progress. And that will really help us to get low-cost deposit in current account. On the savings account side, we are re-energizing our branches. Branch cross-sell is getting augmented. We are launching specific segmented product like women, NRI, and some of these affluent segments. So all of these will hopefully help us to build our momentum on the deposit franchise. Retail plus CASA continues to be very strong at 69, there about 70%, and we will continue to grow that up.
All right, Bandhan Bank's talk of the morning and the management talking about how they see their CASA growth only improving 9.5%, nearly 10% up. It's all about the banks and the financials this morning. Look at the PSU Bank Index as well. Bank Nifty also, PNB, Punjab Sind Bank, IOB. These are some of the names that are really moving sharply this morning. Let's get a quick view. We've talked a fair bit about financials. We've talked a bit about cement as well. But Chakri, let me come to you on what happened to that consumption story that was dominating all of last week, post-budget, defensives. Is the defensive play at the back of the room for now?
Yes, I think defensive still haven't picked up. The numbers are clearly showing that there is no acceleration in earnings yet. And that story is likely going to take at least another quarter or two before we see a pickup. So I think from an FMCG, the valuations are high, earnings, no acceleration, and therefore we will stay away from FMCG.
How do you think one should trade the FMCG back? ITC has stood out on Friday. It did contribute and did its path. This morning on an ITC, a Tata Consumer, Godrej Consumer, they're all deeply in the red. Is there a shorting opportunity here, you think? Because there's been a big change between what we saw on budget day versus what we are seeing today. So 3 trading days have changed the landscape over here, at least for the interim.
I think, Samina, ITC still stands out as a buy on dip, and you can see it is holding on to very strong support of 475, 480. It will continue to do so. I think this level, in fact, is a good buy. One can just play for a contra buy on this level. A slight dip towards 495 can also be a good buy. Just keep a stop loss of 475. The stock has given a breakout. It is continuing to hold above the breakout. It can bounce back from these levels, again test 525, 30 odd levels.
Right. Kush?
Yeah, please continue, Samina.
No, go on. I was just getting,
I was just saying some of the stocks from last week which are perking up or cooling off, one of them has to be the wind energy space, and Suzlon perking up yet again, another 1.5% added, and Inox Wind up another 4% as well. Kush, we've spoken about these stocks a lot. Anything, should one book profits here? Because the rally has been fairly swift.
Well, it has been, but there is at best what you're seeing is perhaps some sort of a consolidation. There isn't really too much of a worry here, as opposed to the discussion around the FMCG names. So I think Suzlon, Inox Wind, both these stocks you should continue to hold. There could be some consolidation, but on the whole, as I said, the trajectory still looks north. Just as a quick update, Deepak Fertilizer we had discussed as a morning update. 880 was the first target, 895 second target. The first target's been hit. So if anyone's got a position, they should now trail the stop loss to their buying price and continue holding this for the second target of 895.
Kush, Sony, Chakri, thank you very much for joining us this morning. It's turning out to be an exciting Monday. Of course, the markets have cooled off from that, closer to 24,900 now, but 25,000 is aspirational and could be achieved anytime today or over the course of the next couple of days. But for now, the bulls have it under control. Bank Nifty is doing exceptionally well. 51,500 was a key level of resistance on Bank Nifty. We saw it participate in the August series after, of course, underperforming significantly all through July. 51,852 is what we have on Bank Nifty with a gain of 1%. The action is across the broader market, so be it banks or be it earnings, everything across the board is looking pretty solid. On the Nifty 500, the gains are 0.5%. REITs is topping the list with a 10% up move on back of a board meeting that's scheduled for the 31st of July. For the conversation around the bonus issue, 1:4 is what the street was given in 2019, so that's pretty much the range we're looking at as well. The stock rate's 10% higher. Bandhan is the next big gainer, up 10%. City Union Bank, KFin, PNB, Keynes Technology, IOB, JNK Bank, Nuvama are the top gainers in terms of the Nifty 500, and they're largely backed by earnings. But let's go across to the conversation my colleague Harsh is having with the management of PNB Housing Finance, who is, of course, giving us a sense of the earnings and the outlook for PNB Housing going ahead.
Well, hello and welcome. I'm Harsh Saita. You're watching NDTV Profit. With me is Mr. Girish Kausgi of PNB Housing to talk to us about, of course, the Q1 numbers as well as what's in store going forward. It's a very steady and strong set overall from PNB Housing. growth continues to remain slightly soft, but nonetheless on the retail side, into the teens in terms of the growth. Corporate still degrowing. So, sir, my first question on that, how does growth really shape up, both in corporate and retail going forward? Do you expect stronger growth to come through where corporate is concerned, and how will that add to your overall growth?
Good morning, Harsh. Thanks for having me here. So if you look at the growth, we have been focusing on retail since last little over 3 years. Now, if you look at retail growth, it is 14.4% YOY. So if you look at all the quarters in a year, generally quarter one is soft.
Yes.
For us, quarter one was very good. And this will continue in the balance quarters. Our focus is largely on retail. Corporate book is degrowing. Today, overall book is about 67,000 crores. Out of that, corporate is little over 1,800 crores. So we plan to start corporate this year. Corporate is going to be very, very small. It will always be less than 10% at its peak. So 90% is going to be on retail. Retail is growing at more than 14%. We will take that to 17% this year.
Understood. And you've grown you've grown your branch presence. Talk to us about what geographies you're entering and what's different this time around with regard to the cycle itself.
So if you look at a branch expansion in last 1.5 years, we've added 180 branches. So today we have 303 branches. Out of that, largely the expansion has been on the affordable and emerging, which is high yield business. So today we have 303 branches. If you look at last year, the entire business was done from 200 branches, because 100 branches we opened between December to March. Now this year we will have 100 plus another 3 branches which we opened in quarter one, which will start contributing. So we have a great story on the growth on retail side. Corporate we're going to restart, and this would definitely help us, especially on the government PMAY, it to be announced, in the sense the nitty-gritties of the scheme will be announced in next 3 to 4 weeks time. I think that's the big story for us.
Got it. And how much of your book comes from PMAY? Because PMAY has had a significant dent on the housing sector overall over the last maybe around a decade or so. What's the thought process and what's the kind of impact on your book is what I want to try and ascertain.
See, if you look at last 2 terms, this was started in the year 2015.
Yes.
So in about 7 to 8 years time, the amount utilized was 1,65,000 crores. Now this time, the overall investment in housing is 10 lakh crore. Government allocation is 2.2 lakh crore for 5 years. So this time it is going to be massive. It's going to be very good. I think if you look at the intensity, because this time I think even the authorities, government wants to kind of market this, right? And therefore demand is going to be huge. To that extent, all our branches, initially the thought was only the affordable branches will cater to PMAY. But now all the branches, whether it is prime, emerging or affordable, all 303 branches are geared up. Now there are 3 benefits in this. One, demand will drastically go up. It will help every housing finance company which is largely into affordable and emerging to grow much faster. Number 2, the funding which comes under PMAY to the lending institution is going to be at a lesser cost compared to earlier. This is second, which will bring down the cost of borrowing. Number 3, the margin on PMAY is going to be better this time. I think based on the interaction what we've been having with all the authorities in last 2 months, the sense what we're going to, what we have is that the margins are going to be better, the growth will be much faster because of this, and I think this is going to help the entire housing industry.
But sir, what's the lever for margin? Sorry, I want to understand that piece.
So I think this is my assumption based on our discussion. We have to still wait for the scheme. So what's going to happen is that the funding is going to come at a lower cost, number 1. Number 2, there's going to be a lending cap.
Okay.
Which means the margin will be fixed. The margin which will be fixed for PMAY will be much higher than our current margin, which is now 3.65.
Yes.
So it's going to be at least 80 to 100 bips higher.
Understood.
So in that sense, PNB is going to gain the more loans we do.
If you look at till March 2022, we have done over 13,000 crores under this scheme.
Okay.
So I think from now till next 2-3 years, it's going to be humongous.
Understood. Got it. Okay, I'll talk about asset quality now. We've had a very benign cycle when it comes to credit costs. We are currently at negative credit costs. What's the kind of expectation going forward? You're growing geographies. You're doing higher yielding loans, as you mentioned. Does that come with a higher level of risk, and what's the kind of risk you're assuming on that?
I think risk in this business, blended credit cost for us ideally should be around 0.4. But I think for us we will take a lot of time. At least for this year and next year, the credit cost is going to be muted. Topping that, we have a large written-off pool.
Yes.
So we have very good recovery coming in since last 2 quarters. I think that trend will continue for next 4 to 5 quarters. So credit cost is going to be muted. It will be around 25 to 30 bips.
Got it. And what's the recovery pipeline like? What's the quantum of recovery expected FY 25-26 over the next 2 years?
So this year, overall on the retail side, we would be able to recover about 180 to 190 crores.
Okay.
From the written-off pool. The overall pool on retail is 500 crores. On the corporate, it is 1200 crores. We will recover that in next 3 years.
Understood. So that's a large recovery chunk also which will come through. Understood. Okay, and with regard to, sir, the way in which your margins are evolving, you're currently at 3.65. We've seen good pressure coming in from cost of funds for most NBFCs, banks as well. Banks seeing a lot of deposit growth pressure, liquidity in the system stretched. What's your sense with regard to margins? Can you hold on to 3.65?
So if you look at the last couple of quarters, we got a rating upgraded from AA to AA+. That helped us to bring down the cost. Cost has come down from 7.98 in Q4 of last year to 7.92. Incremental cost of borrowing is 7.75. For us, deposit is a good story. We have grown by 7%. Now the book is over 18,000 crores. Now talking about margins, our guidance is 3.5. So we'll be, today it is 3.6. We'll be able to maintain around this level for next 2 to 3 quarters time. And then because of segment change, restart of corporate, and there is some leeway on getting the cost down because of renegotiation, because of the rating upgrade, and also PMAY. So after 2-3 quarters time, I think the NIMs will start inching up.
Understood. Oh, okay, actually inching up. And, so my last question is with regard to investors. Of course, you have a clutch of investors within your fold, some of them also partially divesting. Do you expect, are there conversations with regard to more divestitures coming, or do you believe that they're here to stay now?
See, we don't really engage on this.
Okay.
So if you look at the investors, I think some investors have stayed invested for a long time. And a lot of new investors got in just before rights. I think it's a continuous process, and we are part of this entire ecosystem. And as a company, we focus on very strong operational growth, and whatever changes happens at the shareholding level, I think it's part of the whole game. We don't engage on that specifically.
I understand. Okay. Thank you so much, Mr. Kowski. It's been a pleasure speaking with you. And thank you for coming in person and speaking with us and giving us all of those insights. With that, we'll wrap this one up. We'll slip into a short break. More on the other side. Stay tuned.
Well, back with India Market Open right here on NDTV Profit. It's a banking day, and amongst other things, we also caught up with Mr. V. Vaidyanathan. He's the Managing Director and CEO of IDFC First Bank. Let's hear out his view on Q1 earnings and, more importantly, the outlook for FY25.
Last quarter, when we were announcing results, we called out the fact that there were floods in Tamil Nadu, and there will be an impact on the books, but we had kept the amount open. So because we were still evaluating it. So basically we have the business, a microfinance business, where you lend to groups of borrowers and as a joint liability group. So we have that business that's about a 13,000 crore book for us. 60% of that is in Tamil Nadu. So in Tamil Nadu, the massive floods. So people at the bottom of the pyramid usually get impacted when these floods happen. So, we have a policy of just taking everything as they come. And we have disclosed it and we've taken the provisions for that. But it doesn't disturb fundamentally the core story of the bank and all that. All that is safe. This is one part of the pie.
Would you say this is a blip for the first quarter, or do you see the impact sort of flowing into the second quarter as well?
It will flow because as the portfolio ages and moves to the to later buckets, there will be certainly an impact next quarter also. Then Q3 it will taper off, and by Q4 it will vanish. So,
is that why Is that why you kept the credit cost guidance tight at 1.65? Is that why?
That's right. So basically, we are quite happy that the rest of the book, is really very strong. The rest of the book is like 94%. And that's like very, very good. Even this 6%, it's not that it's like completely blown up or anything like that. It's just that it has its share of cycles. So let me say Q1, Q2, Q3 is a little more impact. Some, and then by Q4, hopefully it will just, wane away. And then we have guided 165 for the full year, excluding JLG. And for JLG, we said 20 basis points. But frankly, even at 185 in today's credit conditions, it's a good number.
Yeah. Related to that, you've seen this across lenders, Q1 looking a little elevated on the asset quality front. Just tell me, to your mind as a banker, do you see that maybe the years of months and quarters of sliding gross NPA, maybe that's sort of over, and that we have to be okay with this is the level at best which the industry can operate at its maximum efficiency?
No, I don't think so. I like to put it like this. So basically, the normalization of credit will happen. Normalization means until last year we were having an NPA, but we're having a recovery from the past pools. Right. So this time, there's no such recoveries because the books have whatever had to be recovered have broadly been recovered. So let me call it normalization of credit, and that's what is happening. But of course, we should always be very watchful. But there's nothing fundamental here that has got disturbed either for the system or anything like that.
Okay. A couple of questions around around your core business. Now, advances and deposits growth both have been strong on a YOY basis. Even QOQ, they're looking quite good. Tell us a little bit about what the rest of the year is going to look like on these fronts.
So our deposits have, as you know, have grown 39% YOY. I think it's really a strong number. And it's been running like this, growing like this for 5 years at a stretch. So it's not even a one-time event happening to us. More importantly, it's largely coming from retail. So that gives us that extra comfort. So this year, for rest of the year, we are planning to grow it at 30%. As in when you wake up in March 2025 and check against March 2024, we expect to have grown deposit by 30%. It should not be difficult when growing at 39%. On the loan book, we will be growing somewhere around 22% in line with the guidance. So, if you grow 20, grow that at 30, the credit deposit ratio will further come down. It is our biggest objective to keep improving our credit deposit ratio.
On a period end basis, I think it's close to 100%, if I'm not wrong, your credit deposit ratio. Where do you want to see it? What is the healthy level for you?
First of all, the good news is it come below 100, like 99 something. And the context is very important. It was when we did the merger, because the DFI converting to a bank, we started at 160%. If you add credit substitutes, like lending to a corporate is also lending only, If you add that to credit, it's like 160%. It's now come down to below 100%. Now, 1 year forward, M25, we think like something like around 92%. A year after that, come to 80 something, 87, 88%. So within 2 years will be, the pace at which this has got fixed is really something to watch.
A quick question.
And the incremental credit deposit ratio for the last 1 year, 12 months, has been just 75%. So,
right. Okay. I want to take the NIM question next. Now, there's been a contraction on a QOQ basis, expected because you're seeing higher deposit growth and thereby more interest expenditure that is happening on every bank's portfolio. But do you think that maybe this is the bottom, or is there further sliding expected?
Just one small correction there,
sure.
From your understanding point of view.
Sure.
It's not because the deposits are growing.
Yeah.
It's more because the fact that our bank also had made certain investments in government bonds,
right?
Because we had excess liquidity, and that was a good sort of it was making an extra income for us.
Correct.
That was a position our bond traders had taken. So that is why the NIM was affected a little. But otherwise, still at about 6.3% or 6.25%. I think it's a good number. We expect to roughly give or take sustain it for the rest of the year.
Okay. And lastly, with regard to the LCR framework that the RBI is proposing at this point in time, it's a draft framework, of course. Is there likely to be pressure? Because analysts seem to suggest that your bank will be one of the ones that will be hit if these guidelines do come in from 1st April.
I think, maybe analysts put it out, but they didn't. I'm not sure what extent of research they did. I respect them, but I think I'll tell you the share numbers just for simplicity, and that will clear the air. Under the new framework, if we were to, assuming it comes into force, we think that the impact for us will be like 2 or 3 basis points, which means that to retain a healthy LCR, you will need about 10,000 crores more of deposits, and 10,000 crores or so. And for that, we'll probably borrow them in the differential between the rate we'll borrow vis-a-vis what we'll have to deploy in government securities or like at about 6.7%. That differential about 70-80 basis points. That 70-80 basis points multiplied by 10,000 crores should be about 70-80 crore. Not like for a large bank posting the kind of profits that we expect to post next year. It's not. We'll take it comfortably.